Hi, and welcome back to another episode of McCall Media TV Live, whereby in today's broadcast, I'm going to be talking to a Meet the Expert, Nicola or Nikki Hageman, all about different VAT aspects and how it affects a small business. How are you doing, Nikki?
Yeah, good, thank you. How are you?
Not too bad, not too bad. So before we dive into this today, just introduce yourself real quick, and then I'm going to play my little intro, and then we can crack on with you've got a slideshow, I believe. Is that right?
Yeah, I have. I'm going to kill you with PowerPoint. Sorry about that.
That's okay, that's fine.
So yeah,
Okay.
I'm Nikki, and I run an accountancy practice called Nicola Hageman Accountancy, and we're based just outside Bedford, so sort of middle of the UK. But yeah, we're working with loads of small businesses at the moment, especially around kind of COVID-19, but people are still expanding, growing, and wanting to know kind of what the next steps are, and VATs always comes up as a question for small businesses. So, yeah.
Of course it does, yes, and I've got a few questions I think in line for you as well this evening, so I'm going to play my intro while you get your PowerPoint slide sorted. Okay, right, so I'm just going to change our screen so that you can sort of drive this show. There we go. So I'm going to let you take it away.
Okay, so we're going to talk about how VAT affects you as a small business. So I'm hoping it's not going to be too boring for you. I know it's not exactly the most exciting subject to be talking about, but yeah, I'm not going to kill you too much with PowerPoint, I promise.
No worries.
So, a minute, just going to sort my screen. There we go. So start off, what is VAT? Now, most of you have heard about VAT, value added tax. It's charged on most of the goods and services that you would be receiving, buying from a company. So the business that you are buying something from basically charges you VAT on behalf of HMRC and collects it on behalf of HMRC, and then they will pay it over to them. So there are some different categories of VAT. So the standard rate, that's on most items, 20%. You get the reduced rate, which can be things on like fuel or power in your home. So your electricity will be on the reduced rate. The zero rate of VAT. So food and drink, for example, quite a lot of that is zero rated. So you're still being charged VAT, but you're just not having to pay a percentage of it. And then you have exempt supplies. So that's talking about postage, financial services, insurance, funeral services, for example, they're all exempt. So that kind of is the 4 different categories that you can have of VAT. So I just wanted to go through an example of how you would calculate a VAT return and how that affects you as a business. So you all know you have your sales. If you're VAT registered, you have your net sales, say £1,000. You have VAT on top of that of £200, sorry, and then your gross is £1,200. So that is the cash that you would physically receive in from your clients. You would then have costs associated with that. So say £500 worth of costs plus VAT of £100. The total money you're going to have to pay out in cash is 600 quid. But your actual profit for the business is £500. So when we look at the VAT return calculations, you look at the VAT that you've charged on the sales. So in this case, it's £200. You'll look at the VAT you've paid on your costs, so that's £100, and then you'll work out how much you then have to pay over to HMRC. So it's your sales VAT less your cost VAT, so your £100 will pay to HMRC.
Is it right if I just ask, this obviously is applying for small businesses that are VAT registered, is that right? As opposed to sole traders and things like that?
Yeah, anyone who's VAT registered will have to charge VAT to their clients.
And this is the model that you're talking about at the moment.
And this is the model. I'll go through in a minute why you might register for VAT and how that all works and what the benefits are and things. Cool. But yeah, so this is kind of how it all gets set together. So so when we're looking at VAT, obviously it feels funny you having to pay money to HMRC because you're like, well, I feel like that's an expense. Well, it's another tax for me. But what you've got to remember is that you've charged it to your clients. So it's not actually additional money you're paying to HMRC. You're just moving it from your client through to HMRC. Okay. So this is where the cash movement kind of comes in. So you get your sales. So that's the so £1,200. That's the cash that you received in for your sales. That's your costs of £600 that you paid out, physically paid out for your costs, and the £100 there that you paid over to HMRC for your VAT, and I can see the blue line is in the wrong place there, which has annoyed me. Yeah, so you end up with cash in your business of £500. So that's how much cash you'd have left over after everything had happened, and that's your profit that you've made. So you should be able to see the correlation there as to where the figures come from and how it all kind of comes together.
And I'm just gonna sorry, obviously I'm just jumping in and throwing some like devil advocates in there. Can you just 2 seconds?
Yeah.
So when you're saying up in this, I want to point, but I can't because you're driving. Underneath that top table where you've got the VAT column, and it's obviously the £200 is what you've actually paid out for. The cost, sorry, or is that the costs with the £100? Can you I just want to make sure people are clear, because this is where I start to get things a little bit fuzzy with me and my understanding as well. So can you just really carefully just explain the 200 and the 100, because I know you've taken the one from the other, which is why you've only got the £100 in the table below. But I just thought it might be worth just clarifying that one point a little bit more, if that's okay.
Of course, I'm just going to get a pen so I can just circle some bits for you. So if you were not VAT registered, you would, oh gosh, that's a funny square. Sorry about that.
That's okay. I've done this before on a live as well. It's quite an interesting experience. You'll be fine.
To do it with the maths. So this is the only bit that you would need to be worried about if you were not VAT registered. So you would charge your client £1,000. You would pay £500. Actually, no, that's a lie. You would pay this one as well. So because when you're VAT registered, you have to obviously pay VAT on your goods and services. You would be taking the £1,000 income, £600 of cost. So actually, you'd only make £400 profit.
Right. So this, I think, is where a lot of the questions that I've known small businesses ask, because this is where they get stuck on whether it's the best tactic for them or not.
Yeah. So this is the thing. So obviously, if you're VAT registered, you can claim your VAT back on anything you buy. So that will increase your profit, providing you don't have to reduce your prices. So if you carry on charging £1,000 plus VAT to your clients, you can claim your VAT back. Your profit increases. So you, instead of having to have £600 of costs, you only have £500 of costs instead. So it does make a big difference. The £200 here is how much you charge to your client. So that's the VAT that you would then sort of owe to HMRC that you'd have to then pay back. Does that make sense?
Yeah, that is. I just think it was just worth clarifying those. No,
that's fine.
That's cool.
Okay, so now there are rules of when you have to register. So the VAT threshold is £85,000. If your turnover goes over £85,000, you have to register for VAT. You have no choices. It just has to happen. So this talks about all VATable expenses. So that, when we go back to the original slide, that's all the 20%, the 5%, the 0%. All of that is classed as your VAT inclusive turnover. But if you supply exempt supplies, you don't have to include those when you calculate the 85,000. So if you expect your turnover to be more than 85,000 in the next 30 days, so if you've got a massive invoice that you're going to send out, I mean, I would love to invoice those 85 grand in 30 days. That would be amazing. But yes, if you've got a massive invoice that you're going to go out and you know that in the next 30 days, you are going to go over that VAT threshold, you have to register immediately. Sorry, you have to decide, you have to realise that you have to register from that day. Okay. You've got 30 days to actually register, but your actual registration date is the day that you realise. So say we did it today and it's the 4th of June and I know I'm going to send an invoice out for £100,000 next week. I know that my turnover is going to go over 85 grand. Therefore, today would be my registration date, and I have 30 days to actually register with HMRC and tell them that my registration date is the 4th of June. My God.
It is late in the evening, don't worry about it.
So the other option you have, not the other option, the other way to calculate it is if your turnover was over £85,000 for the last 12 months. So this is a calendar month thing. It's not a calendar year. It's not a financial year. It's a rolling year up to the month that we've just finished. So now we've just finished May. So what we would do is we would look at everything from the 1st of June last year to the 31st of May this year. And if that went over £85,000, now is the time to register. You have 30 days again to register. So you've got the whole of June basically to register for VAT. and your registration date then becomes the first day of the month afterwards. So your actual registration date wouldn't be till the 1st of July.
Okay.
So you have a month of kind of getting your ducks in a row, making sure that you know where you're going. And then you start charging your clients VAT from the 1st of July. So it kind of gives you a little bit more leeway.
That gives you the opportunity to obviously notify current clients. I mean, is there any kind of procedures around? Do they have guidelines like a minimum of 14 days notice or anything like that? I mean, obviously you can't just go, or can you? Can you?
Well, yeah, you have to. I mean, if you go over the 85,000, if you've got current clients that are paying you excluding VAT, you just have to tell them that from the 1st of the next month you're going to be charging them VAT. And unfortunately, it's the law. You
nature of the beast.
So,
okay.
Yeah. So I mean, obviously, you could you have the choice to be able to maybe swallow some of that VAT.
Okay.
So if you decided that actually I'm not going to charge you 20% VAT now, I'm only going to charge you 10% now, and then in 6 months' time we'll up it to the 20%. Obviously, that will reduce your income.
Yeah.
So
but it kind of cushions the fact that I might not upset my clients and that kind of thing, and that kind of So whoever's in that position,
And actually, in some cases, because you can claim your VAT back from any expenses you've got, you actually don't lose out as much profit as you think you were going to. So if you think about the slide we've just had, you would save yourself £100 on your costs anyway. So if you could only if you had to decrease your income to £900 instead of £1,000, but your costs have come down £100 as well, you're still making the same profit.
Yeah. Okay.
So it's definitely worth doing a calculation just to see whether, like, sort of how it affects you.
Okay.
So obviously, when you go over the 85,000, you have to register. But for some clients, some customers, some businesses, it's actually worthwhile registering voluntarily. Okay. So if you register voluntarily for VAT, obviously the benefits are that you can reclaim your VAT paid on any goods and services. So it makes them cheaper for you. So if you buy something for £10 plus VAT, the non-VAT registered cost is £12. The VAT registered cost is £10 because you're reclaiming that too. So that already just increases your profit if everything else stays the same.
And is that something that if you decide to do, you can backdate at all, or is it from the moment you've decided?
You can backdate, but if you backdate your VAT registration date, you also have to backdate the sales that you have made in those months. So there are certain things you can backdate with VAT. So if you have bought something in the last 4 years, you can actually reclaim. If you're still using it within the business, you can reclaim some of that VAT.
Oh, okay, 4 years, that's quite a long time.
Yeah,
and so that's computing equipment kind of thing, that kind of thing?
Yeah, I mean, you probably assume that a computer wouldn't be, if it was 4 years ago, it probably wouldn't be relevant anymore.
No, that's true.
You could claim a percentage of it. So if you bought one a year ago, actually, you might be able to claim a percentage of the VAT that you paid on that. Yeah, so that's something that you would need to look at. You need to look at it on a piece-by-piece basis. It has to still be in the business. It has to still be used. And then, yes, you can. And the same for services. So you can actually go back for 6 months for services as well. So if you've got an accountant, for example, and you register for VAT, you could look at claiming the VAT back for 6 months on that service as well, because you're still using that service. It was related to the business that you're now back registered for. So that kind of all is allowable. So yeah, there are a number of things. And so as long as you're still using them, then that's fine. If it was a direct cost of sale, so if you bought a widget, and then you bought the widget 6 months ago, and then you sold that widget 6 months ago and made the revenue on it, you couldn't claim the VAT back on that because it's already been used on that supply. Yeah. So another thing with being back registered for VAT is it makes you look like a larger business, because obviously you have to be registered if you're over 85,000. If you are registered, people quite often think that you're big enough to register, so therefore they think of you as a bigger business, a larger business,
prestigious thing.
Yeah, and especially if you're dealing with like bigger companies, it's quite a good. It almost sort of makes you look like a proper business. And I know that sounds really silly because you're still a proper business if you're not that registered, but it kind of gives you that kind of air of a bit more authority. I mean, there's lots more sort of admin-y stuff that you have to go through. You have to sort of run your business a bit more efficiently, better run. So you kind of get that sort of that impression as well. So that's quite a nice thing that some people decide to choose to as well.
Okay.
Some of the downsides, obviously, of being VAT registered is that you need to charge your VAT to customers. So if you work with the general public or with non-VAT registered businesses, you are basically giving them a 20% increase on their prices. Right. So you have to kind of look at it, especially if you're volunteering to register. Can you increase your prices by 20% and still make the
that.
same sales, because obviously you're not getting that money. And I think that's what sometimes, especially if you start charging your customers VAT, is they're like, you're giving me you're charging me more. Why are you charging me more? Like, you haven't changed the service. It's like, well, I'm not getting any of that. That all goes to HMRC, because you are basically taking that whole 20% and shifting it over and giving it to HMRC. That's the only thing you're doing it for. So you have to kind of make sure that you are happy that you can still sustain your sales rates, because obviously you don't want to be losing revenue and losing customers. And then this is where I sort of said about maybe splitting the increase with customers. So you might sort of say that you'll do 10% or 15% or whatever it is, or actually your price is inclusive of VAT was £100, now going to be 105, 110, whatever that decides to be. And that kind of is a calculation that you can do to work out exactly where that sort of sweet spot needs to be.
So so essentially what you're saying here is, I think for small, like sort of maybe sole traders at the moment, or smaller 1 or 2 person businesses that are kind of just underneath, maybe thinking about it, what they really need to do is look at their clients and who's on their books and how that would affect, because essentially if the majority of their own clients are limited companies that are VAT registered, then actually those companies won't be losing any more to pay that, because they'll be claiming it back. You'll be better off because you're claiming it and it's all offsetting. But if your predominant client base are sole traders that aren't VAT registered, they're going to be getting a complete sting really in this entire trade. Okay.
Yeah, and I mean it's one of those. I mean, if you're in like the building trade or something, so actually quite a large proportion of your invoice is probably materials, in which case you're being charged VAT on that anyway. So you're losing, you're being charged more. So even if you increased your cost, even if you increased your cost to your clients by 20%, you get to claim that 20% that you've paid on all your materials. So the profit
would still,
you've got a bit of leeway. You have got a little bit of wiggle room, kind of, especially if you're very heavy on the materials or the cost of goods or whatever it is that you're selling to your clients. You do have a little bit of room to kind of, once you've done that calculation, to work out if you need to charge the full 20% to still make the same profit. So yeah, it's one of those that you just need to have a look at it on an individual basis and see whether you would be better off, worse off, and how it would work. And obviously, if you're charging larger businesses, they don't care, because VAT, they'll just claim it back. So it doesn't make any difference to them at all. One of the other things with being VAT registered, you need to do a bit more admin. So your books have got to be in much better order than they should be in pretty good order anyway. But if you're VAT registered, there are kind of regulations around it. So now with making tax digital for VAT, so I don't know if you're aware of that, something that came in last year. Basically, if you're over the VAT threshold and you're VAT registered, you have to make your submissions to HMRC via approved online software. So QuickBooks, Xero, they all do that. There are bridging software. So if you're using spreadsheets, then you can kind of upload it in a roundabout way. But I totally recommend having a look at online software. And to be fair, you should be doing that as a business anyway. I mean, the softwares that you get, they're not expensive. QuickBooks is about £10 a month. So it's not breaking the bank. So to be able to do something like this and get a really good handle on your business finances in general is great. When you're looking at VAT as well, it does it all for you. Not quite all for you, but it does it for you. So you
heavy lifting,
you can get your VAT receipts. If you use something like Receipt Bank, you can actually scan them in, upload them. It splits the VAT out from the net anyway. When it posts through to QuickBooks, it automatically splits it. You can keep track of your profit and loss net of VAT, and you can keep track of your VAT and how much you're going to have to pay out. So if you are going to become VAT registered, totally recommend getting QuickBooks, Xero, that type of online software. There are some that aren't great, so just kind of be aware that getting something for free quite often necessarily the right thing, because the amount of time it will take you to actually implement that and to use it kind of outweighs the cost. So yeah, £10 a month QuickBooks, 25-ish for Xero, depending on what you're doing. So they're not huge amounts of money. Or again, you could speak to a really good accountant and get them to set you up.
Okay.
I think that's it. I kind of was going just kind of a quick overview of all the different bits and pieces. But yeah, I wanted to sort of see if you had any specific questions once I'd gone through the general.
Is there a time of year that you would say if a business is considering that actually helps them or helps the accountant help them, if that makes sense? Because obviously there's extra work involved, and obviously, you know, I suppose right in the middle of January, you wouldn't thank them that much for it, but you know.
Yeah, I mean, you kind of have a little bit of leeway when you actually do register anyway. So it's not like you have to register and submit a VAT return within the 3 weeks or anything like that. So you can register for VAT, and you'll probably have, it's very unlikely that you'll get a VAT quarter that will end on that month, because even if you've requested it, because it's too soon. So you're probably going to have a couple of months before your end of your first quarter, and then you have 1 month and 7 days to actually submit that VAT return anyway. So you've got a pretty decent amount of time once you register. I would probably try and tie it in with your year end, so that you've got, so if your year end was March, try and have your quarters as being March, June, September, December, because that then makes it a lot easier at year end, especially for your accountant. They don't have to worry about accruing VAT and all of that sort of stuff, because it's just your quarter end, you're done. So that's probably the way forward. But actually, if you registered not at that quarter end, you can still request that to be your quarter end, and then your first return will be for 4 months or 5 months instead. So they just kind of tie it all up and get it sort of offset it. So yeah.
And what sort of like documentation, as it were, that you would need? I mean, you're saying about submitting your quarter end, so is it just quarterly things? And then I think there's obviously, when I've looked into this in the past, you've still got the I can't think of the terms. You see, this is not my world. What is it when the director of a business has to self-assessment? Is that right? Have I got the words right?
Yeah. So to do with VAT, the only thing you have to do is you've got quarterly VAT returns.
Right. Okay. So not muddling those two. Okay.
Yeah. So that's all you would have to do as a VAT registered company. You would just have to make sure that you're submitting your VAT returns every quarter, and obviously paying them every quarter as well. So yeah, that's kind of it. It doesn't really change your year end process. It doesn't really change self-assessment returns or anything like that, because it doesn't affect them other than your profit, but that all gets calculated as part of the VAT return anyway.
So essentially it is every 3 months from whenever that quarter actually is defined, and every 3 months you've got a month and 4 days to submit your last quarter's return, and it goes on through infinity.
Yeah, forever, month and 7 days. So your March quarter end has to be submitted by
the 6th or 4th of
June.
Yeah.
No, 7th of May. Oh my God. Yeah, I can't even work out months. You have basically a month and then 7 days. Yeah, so the 7th of May.
Yeah. Cool. Okay. Right. Well, I was going to say, I think I know there's been some questions in my solopreneurs group over the last few months with regards to that, but I think what you've gone through today has actually just clarified, which is why I was throwing in some of the questions that I know what people will have asked, and also from my own perspective, because obviously that's quite interesting for me to know some of the things that you've come up with today. So do you want to let me just throw up your last screen, and you can tell people how, let me just bring it back up. There we go. Tell people how to get hold of you, Nikki.
Yep. So my website's up there, but I'm active on Facebook and LinkedIn. And we've got a little networking group as well that we sort of have, which is online business networking for you. So that's open to all businesses. We just kind of try to help each other out, really. It's a bit of advice, a bit of self-promotion as well in there. But yeah, I'm around. You can find me in most places. I know it's a bit of a long email address and a long website, but yeah, Nicola Hageman, you find me quite easily. There's not many of me around, so it's good.
No, that's cool. Excellent. Okay, bear with me just 1 second. There we go. Let's bring you back up on screen. Thank you very much for coming on, joining me today on our live Meet the Expert. I've actually learned quite a few things. I think you've just kind of filled in a few grey boxes for me with a couple of things that were going on in my world as well. So that's been really handy. And obviously what I'll do after this is I will put your website address in all of the comments so that various people can find you on social media.
Well, thank you for having me. It's been lovely.
No problem at all. I'm just going to play my outro, and then I'll see you in a minute.